Hi, I'm Michael Yardney and I recently celebrated a big birthday. Now, I won't tell you how old I turned, but it's one of those birthdays with a zero in it. Now, as I've been investing in property, and I guess some would say reasonably successfully since my early 20s, I'd like to share some of the most valuable investment lessons I've learned over the last 4 decades, maybe to make your investment journey a little bit smoother. The first lesson I'd like to share with you is it's important to have a plan. Strategic investors have a plan. They know where they're heading and they follow proven systems. And what that does is take the emotions out of their investment decisions and it gives them more consistent results. Look, they make educated investment decisions based on research and they buy property below its intrinsic value in an area that is in areas that have grown above the averages in the long-term capital growth, and they like buying a property with a twist and something where they can maybe manufacture some capital growth, some equity. The second lesson I'd like to share with you is the importance of having a long-term perspective. The property market moves in cycles, and every decade there are a few years when it's flat and there's a few years when the property markets even fall a little bit. However, well-located real estate has increased in value by an average of just over 8% per annum over the long term. Imagine if you could buy the home your parents bought at the price they paid 20, 30, 40 years ago. How many properties would you have bought then knowing what properties are worth today? The third lesson I'd like to share with you is it's really important to treat your property investments like a business. Successful investors that I know have grown a substantial asset base by treating their investments like a business. They do this by surrounding themselves with a good team of advisors, by getting the right type of finance, by setting up the correct ownership and asset protection structures, and by knowing how to legally use the taxation system to their advantage. Lesson number 4, there's not just one property market. Look, while most people generalise and say the property market, there are many sub-markets in Australia. Each state is at its own stage in the cycle, and then within each state, the markets are segmented at different price points, different geography, and different types of property. For example, the top end of the property market is going to perform differently to what new home buyers are buying in that segment of the market, or the investor segment, or the medium-priced established properties. And while at any time there are hundreds of thousands of properties for sale in Australia, it's really important to recognise that most are not investment-grade properties. The next lesson I'd like to share with you is that the crowd is usually wrong. Crowd psychology influences people's investment decisions, often to their detriment. Investors tend to be most optimistic at the peak of the cycle at a time when they probably should be the least optimistic, and they're the most pessimistic, they're the most gloomy, when all the doom and gloom's in the media near the bottom of the cycle, when there's probably least downturn. Unfortunately, market sentiment's a key driver to property cycles, and one of the reasons why our markets overreact. They overshoot the mark during booms and get sometimes a bit too depressed during slumps. Remember, every boom sets us up for the next downturn, just as every downturn sets the scene for the next property upswing. The next lesson I'd like you to understand is that there's always going to be reasons not to invest. Every year brings its own set of crises and lots of reasons not to invest. You can go back as far in history as you like. There won't be a crisis-free year. Sure, some years are worse than others, but there's always bad news, and much of it's unexpected. Where investors get into trouble is rather than focusing on their long-term goals, they see crises as, once-in-a-generation events that'll alter the course of history, when in reality, they're really just the normal path of history. Lesson number 7. The devil is in the detail. With so much market analysis available to us today, it's easy to get caught up in the detail and scared into inaction. It's better to keep an eye on the big picture and look at property markets through a telescope rather than through a microscope. Remember the big picture. Then lesson number 8 is, remember, it's about property. You're in the business of property investment. Yet at times, some investors forget the age-old rule that buying the best property they can afford in the proven locations is what they should be doing. Instead, they get sidetracked by get-rich-quick schemes or glamorous finance schemes, tax streams, and you know what? They tend to lose out. The fact is, property's not a get-rich-quick scheme. Don't get carried away by the next hotspot or the latest fad. Make your investment boring. That'll make the rest of your life exciting. You know, Warren Buffett was right when he said, wealth is a transfer of money from the impatient to the patient. The next lesson I'd like to share with you is use debt as a tool. While many investors worry about debt, taking on all that extra debt, smart investors know that good debt and leverage is the way to build their asset base. They protect their assets by buying time, by having a rainy day cash flow buffer. They set it aside in a line of credit and offset account or something like that. The 10th lesson is that the two big drivers of property values are really wealth of the nation and immigration, the population growth. See, in the short term, our property markets are driven by market sentiment, interest rates, supply and demand, microeconomic factors. But in the long term, well-located properties increase in value driven by the two factors that I just mentioned, the population growth and how wealthy that nation is, both of which will increase substantially over the next few decades. So in summary, I'd like you to learn from these lessons. And that way the roller coaster ride of your property investment career may not be as dramatic. Remember, both fear and greed are going to send you down the wrong path. But sense and sensibility will keep you heading in the right direction towards real estate riches. And while there will still be some ups and downs ahead and problems ahead, we're indeed in a lucky country and our economy is going to remain the envy of most developed nations. Needless to say, a strong economy is good for our property markets. So if, like me, you're confident that we've got prosperous times ahead and our population is going to grow, then really it's the time to get into our property markets again. This means the long-term viability of our property markets are assured. In the short term, I know there's going to be some challenges ahead, but there's also going to be some great opportunities for experienced investors. So what I suggest you do is learn from somebody who's already achieved what you want to achieve. Learn how to grow your wealth. And that's precisely what I'm going to do at our upcoming property and economic market updates, which are one-day trainings I'm going to be holding around Australia in March and April. I won't be conducting seminars like this until well into the second half of the year. So please click on the link at the bottom of this article and get full details and reserve your place. I'm going to be joined by a group of experts in different states, economic experts, tax experts, finance experts, and we're going to give it to you straight. We're going to give you no-nonsense practical steps and honest answers to improve your property performance today and into the future. So please reserve your place and find out more. Just click on the link below, find out about my personal money-back guarantee that your time is going to be well spent. Find out about the $300 worth of bonuses, and I look forward to seeing you at my national property market and economic updates real soon.